All right, so today we're going to be diving into Forex, right? It's a fascinating world, and you always hear about currencies going up and down. It's like a global stock market, but for money itself.
Yeah, exactly. And just like with stocks, you have winners and losers every day. Some currencies are going up in value, others are going down, and it's all driven by, well, all sorts of factors.
It's kind of dizzying to think about all the things that can impact currencies, right? Like what's happening in the news, interest rates, economic data.
Absolutely. And trying to make sense of it all can feel like you need a PhD in economics.
Yeah.
But that's why we're here. We're breaking down a really interesting currency snapshot from September 23rd.
Ah, yes. Our cheat sheet for the day. So for our listeners, imagine this snapshot as like a ranking of currency strength, right? It gives us a glimpse into which currencies were hot and which ones were not on that particular day.
Right. It's a snapshot of market sentiment during the London and Tokyo trading sessions on September 23rd. And let me tell you, there were definitely some interesting movements on that day.
Okay, so spill the tea. What were some of the big headlines from this snapshot? Who are the winners? Who are the losers?
Well, starting with the star of the show, the Australian dollar came out on top. It was the strongest currency on that day. AUD, you were looking good.
Interesting. Anything going on in Australia at the time that could have influenced this? A sudden surge in kangaroo exports?
Well, this snapshot doesn't give us specific reasons, but remember, Australia is a big commodity exporter. So if commodity prices are doing well, like we often see when inflation is high, that often gives their currency a boost.
Makes sense. Commodities are hot. Aussie dollar gets hotter. Okay, so what about the other end of the spectrum? Any currencies taking a bit of a dip that day?
Yeah, actually, a few notable ones. The Japanese yen was at the bottom of the list, along with the Swiss franc, the Canadian dollar, and even the US dollar wasn't looking too strong.
The US dollar, weak.
Yeah.
Now, that's something you don't see every day. I wonder if that ties back to any recent economic data releases or maybe even political events going on at the time.
It's definitely something to keep an eye on. This is what makes Forex so fascinating. Currency fluctuations are like a puzzle. You've got to look at all the pieces to really get the full picture.
And we've got a whole puzzle box to unpack here. So let's start piecing it together. We know which currencies were strong and which were weak on this particular day, but what does that actually tell us? If I were looking to trade currencies, where would I even begin? So we've got our currency all-stars and then the ones that, well, maybe need a little pep talk. But how do we actually use this information to, make sense of it all?
Well, think of this snapshot like a starting point. It gives us some clues about market sentiment, which can be really helpful for traders. For instance, let's look at AUDJPY.
Okay, AUDJPY. So that's, let me see, the Australian dollar and the Japanese yen. And we talked about how the Aussie dollar was super strong that day, while the yen was, well, not so much.
Exactly. And when we look at them paired up like this on the snapshot, we see a strength difference of, get this, 143.610.
Whoa, okay, that's a pretty big difference. So what does that tell us? Should we all go buy Australian dollars now?
Well, in trading terms, we call this a bullish signal. It means the first currency in the pair, the AUD in this case, is expected to strengthen against the second, the JPY.
Okay, so bullish good, bearish bad. Got it. But what does that mean practically? Like if I was going on vacation to Japan, should I wait to exchange my money?
It's a possibility to consider, but remember, this snapshot is just one data point, right? We need to factor in other things too. But yeah, it could be a good time to exchange those Aussie dollars for yen if you're planning that trip to Japan soon.
Right, it's like you wouldn't book a flight based solely on the weather forecast for one day of your trip.
Right.
Gotta look at the bigger picture.
Exactly. And speaking of bigger pictures, another interesting pair on this snapshot is GBPAU, the British pound and the Aussie dollar.
Ooh, GBPAU. Okay, what's the story there? Anything we should be paying attention to?
Well, unlike AUDJPY, this pair shows a negative strength difference, negative 29,000 to be exact. So this time, we've got ourselves what traders would call a bearish signal.
Bearish. So, not as exciting as bullish.
Not quite as optimistic, no. Basically, it suggests that the first currency, in this case the British pound, might weaken against the second, which is that strong Aussie dollar we talked about.
So someone planning a trip to Australia, maybe they hold off on exchanging their pounds for Aussie dollars just yet. Hope for a better rate later down the line.
That's one way to play it, yeah. But again, we've got to emphasize this. Making financial decisions based on one factor alone. Risky business. We need more pieces of the puzzle.
You keep saying pieces of the puzzle. It's like a little treasure hunt for financial clues. And honestly, I'm ready to start digging. What other factors should we be looking at to really understand these currency movements? All right, so we're on the hunt for these Other pieces, right. What should we be looking at? What else can help us understand what makes these currencies tick?
Well, just like you wouldn't plan a trip based on just the weather.
Yeah.
You know, you got to know more than just if a currency is hot or not at any given moment.
Okay, so what else is there? Besides just the snapshot we talked about.
Or the big ones, interest rates.
Yeah.
Central banks are always adjusting these and those changes. They send ripples throughout the entire Forex market.
Interest rates, right. I always hear about those, but to be honest, I'm not totally sure I understand how they actually impact currencies. Explain it to me like I'm, well, not an expert.
Basically, when a country decides to raise its interest rates, that can make its currency more appealing to foreign investors. They might see it as a chance for better returns, so they want to buy in. That increased demand can push the currency's value up.
So higher interest rates act like a magnet for investors, which then boosts the currency's value.
Yeah.
It's all about supply and demand.
Exactly. But that's just one piece, right? We've also got to keep an eye on economic data. Things like GDP growth, unemployment rates, even consumer confidence reports.
So basically like the mood of the consumers. How optimistic or pessimistic are people feeling about the economy?
Yeah, exactly. All that plays a role because these are all signs of a country's overall economic health and a strong economy. Well, usually that translates to a strong currency as well.
Right. Just like you'd be more likely to invest in a company with solid financials, it makes sense that the same logic applies to currencies.
And then, of course, we can't forget about those wild cards. Geopolitical events. Those always throw a wrench into things.
Oh, yeah. The unpredictable stuff like elections, trade agreements, even pandemics. I imagine those can really shake things up. For sure.
Those events create tons of uncertainty in the markets. You never know which way things will swing, which can cause currencies to rise and fall like, well, a roller coaster.
So we've got interest rates, economic data, geopolitical events. It sounds like you almost have to be a fortune teller to really make it in Forex.
There's definitely a bit of art to it, you know, trying to anticipate the unexpected. But that's what I love about it. It's dynamic, it's challenging, and it's always interesting.
Well, you've certainly convinced me it's fascinating. But for anyone listening who might be feeling a little overwhelmed by all this information, what's your biggest piece of advice? Where do they even begin?
I always say don't be afraid to just dive in and start learning. There are so many resources available, and the more you understand about how Forex works, the better you'll be at navigating it.
Knowledge is power, right? Especially when it comes to the world of finance. Well, that's about all the time we have for today's deep dive into Forex. Remember, everyone, this isn't financial advice. We're just two curious folks exploring the exciting, always evolving world of currency markets. So until next time, happy trading.